Hello everyone, welcome to today's lecture. So today we are going to continue the topic of audit under fiscal laws. Okay. So till last lecture, just to give a summary that what we discussed, we discussed about section 12A, audit under section 12A, where we discuss about form 10, 10B. I also disclosed, I also presented form 10B, 10BB. Then we discussed the definition of accountant under section 288 of Income Tax Act, how all the things are linked, like 143, 141 of the Companies Act. Okay. Then we discuss about the definition of relatives. Then we discussed section 44AB. In that we discussed, key provision of 44AD, ADA, and other, tax audit provisions. We also discussed about the rule applicable with section 44AB, that's rule 6G, wherein we discussed, okay, how 6G play an important role for the deciding the part of it under which category we are required to issue which type of audit report. Then we saw some of the questions, and then we also discussed about, form 3CD, a summary, a basic, but not in detail. So that was done in the last lecture. Okay. Now, from here, we will be starting form 3CD, understanding of form 3CD, how audit is required to be done in form 3CD. Okay. Then for that, what, as I, iterated in the last lecture, I'm reiterating again, I need that you guys should be aware with the basic income tax provisions which are there in the form 3CD. I will explain in a summary form that, okay, what is the section about, but I will not be discussing in depth the income tax provisions. Okay. So in that case, it would be helpful if you have a readily available the sections with you, or the understanding of the sections with you. Again, please be ready with the, the understanding of the sections, so that when I will be discussing that particular clause, when I will be discussing that particular, section, it will be easy for you to understand and to make a reference of that particular section and to understand, okay, what I'm trying to provide you. Okay, let's start the form 3CD. Now, we saw in the last lecture that the auditor is required, tax auditor is required to submit particulars which are under section 44AB in form 3CD. Now, what is form 3CD? Form 3CD is basically divided in two parts, part 1, part A, part B. And in total, if you see in form 3CD, on a clause level, you have 44 clauses in form 3CD. 44 clauses to report. Now, each clause, that's a serialized number. But if you see, there are more than 44 clauses, because you have a sub clauses, you have a clauses which were inserted later, like 36A, or some other which are not in which are over and above the normal clauses, which were added later on in the form 3CD. So you have more than 44 clauses, but on a serialized way, you have clause from 1 to clause 44 in form 3CD. Now, before I start, the question is, do I need to remember the clause number in the form 3CD? Answer is yes. You are expected to remember the number in the form 3CD. Okay, which clause it is, under which clause it is being reported, and what is the, you can say, background of that particular clause. So that is required to be provided in exam. So for example, if there is something, let's say hypothetical example, where do you report the name of assessee? So in that case, you need to say that, okay, clause 1 of form 3CD. So you need to remember the number of that particular clause that is required. Okay. Now let's start. So as I told you that form 3CD is divided in two parts. Part A, my basic information details, where I get the basic information about the assessee, name of the assessee, address of the assessee, PAN, whether the assessee is liable to pay, indirect taxes like GST, excise, service tax, sales, customs. Okay. Then if yes, then identification numbers, status of the assessee, previous year, details of assessment year, under which clause section 44AB is applicable, and whether the assessee has opted for presumptive taxation scheme or not. These 9 clauses, or 1 to 8A, are the part of basic information. Name, address, PAN, indirect tax details, status, previous year from to assessment year, under which clause 44AB is relevant for this particular assessee, and presumptive taxation. So these are the 9 things that are there in the basic. Okay. Now coming to part B. Part B contains all the details that is there, that requires a lot of understanding and section involvement and everything. Okay. Now when I talk about part B, so let's start part B. First, structure detail. So first thing is that the clause 9 asks is that if firm or association of person indicate name of partners, members, and their profit sharing ratio. Okay. If this assessee is a firm or association of person, then indicate the name of partners and members with their profit sharing ratio. Clause 9B talks about if there's any change in the partners or members or in their profit sharing ratio, then please share such change. Now, along with the clause, we also need to understand from where we'll get these details. It's not only the clause, what is the requirement of the clause, but from where we'll get the details, from where we can audit these details basically. So quickly, from where you will audit the structure detail of a partnership firm? From where you will audit the structure detail of the partnership firm? A quick question. Come on, guys. If I have to audit, if I have to identify this particular information, from where I will do? Quickly. Quickly, guys. Absolutely correct, Janvi. Come on, come on. Quickly, guys. From where you will audit the details of partnership firm, like structure, members, profit sharing ratio, from where? Simple question. Nothing difficult in this. Nothing difficult. Okay. So here, what I can do in case if it's a firm. Now, first of all, whether this firm will include LLP or not. My first question, whether this firm will include LLP or not. whether this firm will include LLP or not. Yes. Okay. Good journey. Yes, it will include. It will include LLP. Now, if this includes LLP, then I need to see the relevant documents for that also. What documents I can see over here? What documents I can see? So the documents, if I want to see, is the registered, in case of firms which are registered like LLP, filed with MCA. So documents filed with MCA, you can say. Just a minute. Just give me a minute. Hmm. Okay. So what documents I can see is, in case of registered firm, I can go for MCA documents to verify these details. Okay. And in case of unregistered, then I can say partnership deeds, partnership agreement, any minutes of meetings if are present within the with the partners, between the partners. Okay. I need to obtain certified copies of the deeds, document, notice of change, and all those things. So it should be certified copy. It should not be a draft without signature also but I should obtain a certified copy. Okay. Same way, if there is a change, I will identify change from here only. That okay, this is a particular change in a particular form or firm. Okay, and accordingly, I'll report the change based on these documents. Fine. So that was my clause 9A, 9B. Nothing much in detail. 10A, 10B. 10A talks about that the nature of business or profession. If more than one business or profession is carried during the previous year, the nature of every business and profession is there. If there is any change in the nature of business or profession from the particulars of such change. Now, if I have to identify the nature of business or profession, okay, from where I can get this thing, from where I can get the details of nature of business or profession. Quickly, guys, from where I will get the details of nature of business or profession of the company. Come on, from where I'll get the details? If I have to get the details, then from where? I can get the details of nature of business from basically my financials, statements, policies. Then you can say at times, okay, if the firm or if the assessee is registered with the GST, you can also see the nature of services or products or business they have listed in the GST. So registration with the concerned authorities. Annual report, very good. So other documents. Okay, and accordingly, you can identify whether there is a change in the current year or not. Clear? Yeah. So that was the structure, detail, and nature of business. Mention the books of account generated by the computer system. If the books of accounts are not kept at one location, please furnish such addresses of the location along with the details of the books of account maintained at each location. And fourth, uh, the list of books of account and nature of the relevant documents examined. Okay. Now, if you see this particular clause, it talks about the list of books of accounts. Now, which are the books of account generally? Like section 44A AA prescribes a list of books of account that are required to be kept at minimum. At minimum. That will be, for the class of the people that they are already there, prescribed in section 44AA. So if yes, then whether you are maintaining that books of accounts or not, that is required to be reported over here. Then first is whether it is prescribed, yes or no. Okay, so you need to say yes or no. Second, if yes, if it is yes to first, okay, then the list of that books of account. If they are computerized, then the list of books of account. And fourth talks about what books of accounts or documents you have examined for the purpose of audit. Okay, for the purpose of audit, in that case, what you have seen, like not only sales register, purchase register, but minutes, contracts, agreements, okay, some other documentation that you have seen to validate, the transactions or the details that are there, that are required to be provided under this Form 3CD. Okay, so that is something is there. Now, the question is that when I say in point number 3 that, okay, you need to mention all the locations. So, see, if books of accounts are not kept at one location, please furnish the address of locations along with the details of books of account maintained at each location. Okay. Now, here, if the books of accounts are kept at multiple locations, then you need to mention the details of those multiple locations. Now, one question. What if your books of accounts are stored on cloud? Which address you will mention? If your what if your books of accounts are stored on cloud? If you are using a, let's say, a cloud-based software where all of your books of accounts are on the cloud, then which address or location you will mention over here? Come on, guys, quickly. Come on, guys. Which books of like what you will write when if your books of accounts are kept at cloud? Correct, Namrata. Correct, Jagdish. Correct, Ravi. So what I will do is I'll specify the details of the server or IP address of the server where the books of accounts are there. Okay, so I'll mention the details of the server where the particular books of accounts are being hosted, and I can access from, let's say, for example, my server is in Mumbai, okay, or it's in Bangalore. Then if I'm able to access the books of account, okay, if from the Mumbai server, then yes, the details of Mumbai server. If my books of accounts are also hosted from some other server, let's say Bengaluru server, Kolkata server, in that case, I need to mention the detail of that server also. So location of the server or unique IP address can be mentioned over here. Clear? So with change in time, you will see such changes in the form, for the reporting, because day by day, we are transiting from the physical books to e-books. Okay. Now that was clause 11 that we discussed, books of account. Clause 12. Clause 12 talks about whether the profit and loss account includes any profit and gains on presumptive basis. If yes, indicate the amount of the relevant section. This is 44 AD, AE, AF, B, double B, double BA, triple B, chapter 12G, first schedule, or any other relevant section. Now the question is what are these sections about? I'll just quickly provide you a summary. 44 AD, we know eligible business, presumptive one. 44 AE, transfers business. 44B, my shipping of a non-resident shipping business for a non-resident. 44 double B, providing facilities or services with respect to supplying plant and machinery, okay, for extraction of production of mineral oil. 44 double BA, operation of aircraft. 44 triple B, civil constructions, turnkey power projects. Chapter 12G, shipping companies again. First schedule, insurance business, and then any other relevant section. So there is a section 44D, 115A, 1B. Okay, these are the presumptive one again. So these are also included. Now, someone might raise a question. Okay, that why 44 ADA is not included over here? Why 44 ADA is not included here? So, see, when I talk about 44 ADA, okay, in that case, what is happening is 44 ADA is not mentioned over here. But when we go for filing on the website, income tax website, 44 ADA is specified over there. I'll tell you. So 44 ADA is not specified in Form 3CD, but 44 ADA is specified in the tax utility, which is available online. And accordingly, like when you will file Form 3CD or through tax utility, you will encounter that, okay, that, you are also required to provide the detail for 44 ADA. So in that case, although 44 ADA is not part of here, but I'll say it is basically, also included over there, like through the utility. So you need to see sometimes, minor changes are there with respect to the utilities and the actual, the Form 3CD is there. Because when you will see the utility, you will find, okay, a bit of tweaking has been done. Okay. Any doubt till now? Any doubt with respect to this? Okay. Then clause 13, again, it talks about method of accounting employed in the previous year. Okay. Which accounting method we have, the assessee was employing in the previous year. Now, method of accounting like mercantile or cash basis, that is something required to be reported over here in 13A. Okay. Accrual basis of accounting or cash basis of accounting, whether it's the hybrid mixture of cash or mercantile, which is not permitted, by the way. Hybrid is not permitted. Okay. So once you decide, you need to consistently apply that method of accounting. So that is there. Then the second is 13B is whether there has been any change in the method of accounting employed, okay, compared to the method employed in the immediately preceding previous year. So is there any change in the method that was adopted last time and the method adopted current year? If there is a change, you need to provide the details over here. Now, the method of accounting employed in the previous year. See, if it is a company, which section under the Companies Act provides the detail for the method of accounting? Come on, guys. Which section under the Companies Act provide the detail for the method of accounting? Which section under the Companies Act provide the detail for the method of accounting? Come on, guys, quickly. Quickly, guys. Under which section of the Companies Act the method of accounting for a company is prescribed? Okay. Good, Janvi. Good, Namrata. I have received only 2 answers. Come on, guys. I actually need a lot of participation from your side. Then only it will be, you will be able to understand the concepts over here appropriately. Trust me. Come on, guys. Under which section? Under which section the method of accounting for a company is prescribed? Section 128 of the Companies Act, that is 128(1), books of account. If you read the 128(1), it says that every company shall prepare and keep at its register office books of account and other relevant document, and every there are lots of things. Then if and explain the transaction affected both at the registered office and its branch, and such books shall be kept on accrual basis and accordingly the double entry system of accounting. So section 128 of the Companies Act prescribes me the method of accounting. I cannot deviate in that case for company. So I cannot deviate from accrual basis and double entry system in case of companies. So for company, by default, 128(1) is present, and that will be the answer of this particular clause. So there will be no change because you are applying consistently the same, which is 128(1) is saying. So for the company, it will be same. If you identify any revision of the financial statement in the board report. And 145 is the auditor to sign the audit report. Okay. So 128(1) is a basic section which provides you the accrual basis of accounting. Any doubt till now? So for company, this should be the same. And you can corroborate the same from the policy of the company. Okay. I'll go and check the company's policy on accounting. And then from there, I can, identify whether the section 128.1 is complied with or not. Any doubt? No? Okay. Then 13C. If the answer to the B is affirmative, okay, details of such change and effect thereon on the profit and loss account. If there is a change in the method of employment, then you need to provide the details of such change, where it is impacting the particulars, whether it is increase or decrease in the profit, and accordingly you need to provide the details over here. Okay. So if there is a change in the method of accounting, then you need to provide the details over here accordingly. If there is a change, but for a company, it is not possible to deviate from the accrual accounting system. In case of individual or a partnership firm, which is not a LLP, again, in those cases, also, you need to understand that why there is a change. For this is very important and very, critical clause. If I change my method of accounting, I need to be double sure why there is a change in the method of accounting. Because I should be, consistently following a single method of accounting. If there is a change, then why there is a change? I need to understand from that point of view. Okay. Then clause 13D, whether any adjustment is required to be made to the profit and loss for the complying with the provisions of ICDS notified under 145(2) of the Income Tax Act. So if there is any change, if there is any adjustment required, okay, then whether that adjustment has been made to the profit and loss account in respect to the, compliance with the ICDS. And if yes, the change has been made, you need to give the details of such changes, particulars of such changes ICDS wise. Clear? Any doubt? Okay. To summarize, number one, what is the method of accounting that is employed by the assessee? Okay. Number two, whether this was the method of accounting employed by the assessee in the last year also, that is B. C talks about if answer is no, matlab there is a change in method of accounting. If there is a change that you have reported in B, then give the details in C. Okay, 13C. That whether what is the change, where it is impacting, whether it is increasing or decreasing the profit in overall level. Okay, you need to provide that details. Accordingly, you need to report it. Now, I have one question, that will enhance your understanding about the clause. If Mr. A changes the accounting policy, if Mr. A changes the accounting policy for recording the bad debt provision or slash depreciation, okay, then would that be change in method of accounting? So if Mr. A changes the accounting policy, okay, I'm changing the accounting policy, okay, would that be change in the method of accounting? Come on, guys. So I'm asking a question or not. Come on, guys. If I'm changing the accounting policy, okay, let's say bad debt provision, depreciation, warranty, whatever you take it. Okay. If I change the accounting policy, am I required to report in form clause 13C, that is impact of change of method of accounting? Assume that is a change in accounting policy. Okay. For time being, assume that's a change in accounting policy. Let's say not only bad debt provision or depreciation, take any other. Let's say valuation of inventory. Okay, I am I'm adopting a different method for the valuation of inventory. Earlier it was FIFO, now I'm doing weighted average method. So let's say, for example, depreciation. Earlier it was WD, I shifted to SLM or something else. Let's say policy with respect to, recording the foreign exchange translation gain and losses. So if there is a change in accounting policy, how will you treat that? If there's a change in accounting policy, how will you treat that? Come on, guys. If there is a change in accounting policy, how will you treat that change? Will you report the change in clause 13C? Let's say, for example, method of valuation of inventory. As I told you, another example, method of valuation of inventory. I wrote bad debt, depreciation. And the third could be method of valuation of inventory. If that is a change I made, then am I required to report in clause 13C or not? Yes, no, why? I with reason. Come on, guys, quickly. We have to cover a lot of clauses. There are a lot many clauses, and this requires understanding. Quickly, guys. Confusing? Bit difficult or not? I'll tell you. I am not required to report any change in accounting policy here. No. Reason because change in accounting policy is not a change in method of accounting. Both are different. Both are different. Change in accounting policy is not equal to, trust me, change in accounting method of accounting, basically. Correct, Janvi. So change in accounting policy is not equal to change in method of accounting. Change in accounting policy could be, method of valuation of inventory, weighted average, FIFO, LIFO, or whatever you say. Change in method of accounting is accrual or cash basis. Accrual system, cash system, that is its method of accounting. Single entry system, double entry system. Accordingly, if I change the accounting policy, I'm not required to report in clause 13C of Form 3CD. (13D) talks about ICDS, whether there is any adjustment required to be made to the profit and loss account to comply with the ICDS. If yes, then report the adjustment that has been made in 13E. 13F, if there is any disclosure requirement that is required to be given as per the ICDS, then mention that. So disclosure requirement as per the ICDS, 13F. Okay. So 13D, E, F, all three are on ICDS. Whereas 13A, B, C on method of accounting. Clear? Okay. 14. Method of valuation of closing stock employed in the previous year. Clause 14A talks about what is the method of closing stock employed in the previous year. So if there is a change in the valuation of inventory or valuation of the closing stock employed, I'll report in clause 14A, not in 13B or C. 13B or C was with respect to change in accounting method of accounting, whereas 14A talks about method of valuation of closing stock. I will report over there if there is a change in the valuation method. Now, in the case of deviation from the method of valuation prescribed number 145A, so you need to provide then the effect of the same on whether it's an increase, decrease on the profit and loss account, what is the impact. Now, quickly, what is 145A talks about? What 145A talks about? Come on, guys. What 145A talks about? Quickly. One 145A talks about method of accounting in certain cases. Okay. That is like, method of accounting when there is a profit and gains from business and profession. So how the inventory should be valued. Okay, so there is some valuation being given, valuation methodology being given in 145A. So 145A says the valuation of inventory shall be made at the lower of cost or NRV, which is computed in accordance with the income computation and disclosure standard under subsection 2 of 145. That is 145A. So 145A talks about valuation as per the cost or NRV in accordance with ICDS. And accordingly, you need to check whether that is appropriately followed or not. If there's any change in the method of valuation of closing stock, then you need to provide such change, detail of such change here. Clear? Any doubt? Okay. Now, next clause, very important. 15. That talks about capital asset converted into stock and trade. So if during the year, if any of the capital asset has been converted into stock and trade, you need to provide description of that capital asset, date of acquisition, cost of acquisition, amount at which the asset is converted into stock and trade. Okay. So when a capital asset is being converted, then you need to provide the detail of that particular capital asset which is being converted. Description of the capital asset, date of acquisition, cost of acquisition, and amount which at which the asset is converted into stock and trade. Clear? Pretty much simple, nothing complex in this particular clause. You need to provide that detail. But the question comes is, from where will you identify these changes have happened? Like you have converted a capital asset into stock and trade. From where you will identify that? Come on, guys. From where you will identify the details of clause 15? Quickly. From where you will identify this particular detail? Pretty easy. Correct. Books of accounts. You can also fix asset register. If there is a capital asset, then surely this entry might have gone into the fixed asset register also. With respect to the disposal, you can verify minutes, you can verify stock register. Okay. Now I have one question on this. Okay. Let's say, for example, Mr. A, okay, he was an individual assessee. Was required to get his books of account audited for the first time, okay, since inception of his business. During the year, Mr. A converted his capital asset, okay, that is plant and machinery, in stock in trade. In stock in trade, for which Mr. B, tax auditor, was not able to identify the details of date of acquisition and cost of acquisition, as that was done in years when there was no audit requirement. Kindly guide Mr. B with respect to reporting of same. Okay. Now, two things in this particular question. One, there's a conversion of capital asset into stock in trade. However, Mr. B, the tax auditor, was not able to verify the date of acquisition and the cost of acquisition, because this is the first time that his accounts are audited. Mr. A's accounts are audited for the first time. Okay. And the date and the cost of acquisition was done in previous year when there was no audit. How Mr. B should report this thing in clause 15? Let's say I got a transaction which I need to report, but the details are not available, partial details are not available, because that pertains to the year in which there was no audit or no books of accounts were maintained. What the auditor should do? As an auditor, can I say that, okay, this is out of my audit period and hence I'm not able to verify, and that is fine? Can I say that this is out of my audit period and I'm not required to verify? Come on, guys. Can I say that this is out of my audit period? Quickly. What will be the details over here? Okay. Number one, whether I can say that it is out of my audit period, answer is no. No. I need to audit. Auditors need to audit. Then from where I'll get the details? I need to ask Mr. A to provide the details, or otherwise it will be a qualification. Okay. If Mr. A is not able to provide the details, then it will become a qualification. Clear? Okay. Another question, very important one. I'll discuss. Let's say I'll continue same example. Mr. A converted plant and machinery Mr. A converted a plant and machinery, okay, into stock in trade. Or I'll say not a plant and machinery, I'll say, yeah, plant and machinery into stock in trade on 1/4/2021. Okay, 1/4/2021. Wait. I'll not say plant and machinery over here. I'll replace the word with building, land and building. Into stock in trade on 1/4/2021. Okay. Now, this building was purchased by Mr. A in 1998 at rupees 50,000 only. Considering the rate and the area, only 50,000. Okay, only 50,000. During the year, the rate or the amount, okay, the amount at which it was converted into stock in trade was rupees, let's say 15 lakhs. Okay, so the amount at which it was converted into stock in trade was 15 lakh rupees. Now, the WDV in books of account for the land and building was rupees, let's say you have identifiable block, separate blocks and everything is there. Okay, the WDV in the books of account for that particular thing was rupees 35,000 after depreciation. Okay, now Mr. B wants to report the said transaction in Form 3CD. Kindly assist him. Okay, so now I identified, okay, there is a transaction which is required to be reported in Form 3CD, and there is a predefined details that we need to report. That is the description of the capital asset, date of acquisition, cost of acquisition, and amount at which it is converted. Okay, so let's say description of capital asset. 1998, cost of acquisition, and value at which it is converted. Okay, now what will be the cost of acquisition in the current case, guys? What you will report the cost of acquisition here. What you will report the cost of acquisition over here? What I need to write the cost of acquisition? WDV, original purchase cost, or it could be, fair market value. What could be the cost of acquisition? Quickly, guys. What would be my cost of acquisition over here? Okay, good Namrata, good Janvi. There are two options I can opt here for the cost of acquisition. Number one, I can use this cost of acquisition which is provided over here, 1998, 50,000 rupees. I can use this cost of acquisition. Okay. Or the capital asset, where the capital asset become the property of the assessee before the day of 1st April 2001. Okay. The fair market value of the asset as on 1st April 2001 at the can be an option, available for the assessee. That will be the cost of acquisition. Okay. So that will be the cost of acquisition for the assessee. So I can take fair market value as on 1/4/20/2001. Okay. Whereas, can I take carrying value, that is the WDV value, as a cost of acquisition? Answer is no. I cannot do WDV as a cost of acquisition. That is not correct. Okay. So WDV, I cannot do WDV at the cost of acquisition. Plus, at the value at which I have converted is 15 lakhs, which is given, and that will be 15 lakhs over here. Clear? Any doubt? Any doubt? Okay. So this is how I can report it. Now, so clause number 16. Clause number 16 talks about amount not credited to profit and loss account being item falling within the scope of section 28. What is section 28, guys? Quickly. Quickly, what is section 28? I'll not proceed further till the time you provide me. What is section 28? Quickly. Section 28. Come on, come on. Section 28. Absolutely. Charging section of PGBP, section 28. Yes. Correct, Janvi. Charging section of PGBP, section 28. So any amount which is falling under the category of, charging section of PGBP, but not credited to profit and loss account will be reported here. Proforma credits, duty drawback, refunds, duty from customer excise, service tax, sales tax, or such duties credited will be reported here. Escalation claims accepted during the year will be reported here, provided they are not debited to credited to profit and loss account. Any other item of income, capital receipt, if any. If these are the cases, then yes, it will be reported in clause 16 of the Form 3CD. Okay. Any doubt with respect to this? Any doubt? Any doubt, guys? Okay. If no doubts, then I have one question that let's take up that particular question. Okay. Very good and important question that will help us to understand this particular concept. Just a minute. Let me open the question. Just give me a minute. Okay. Mr. A received a car worth of 25 lakhs under the promotion scheme operated by Suk Products Limited, a company, okay, whose dealership was with him. The company granted the car on achievement of the sales targets of rupees 12 crore in a financial year. The car was received by Mr. A in AY 22-23 for completing the sales target of FY 21-22. Mr. A recorded the car in the fixed asset at its fair market value, and accordingly, he created an equivalent revaluation reserve. Mr. A has appointed you as a tax auditor. You need to guide Mr. A with respect to the reporting requirement. Okay, whether this transaction will be reported in Form 3CD or not. Sorry. How this transaction will be reported in Form 3CD. You need to provide this detail. How you will report this? Come on, guys. Where you will report this particular transaction? Quickly. Where you will report this particular transaction? Why, Janvi? Why it will be included over there? Come on, guys. Where I will report this particular transaction. Okay, Jay. Good. Quickly. Okay. There is one more clause. I just want to show you. Okay. Then again, we'll go back to the question. Over here. There's clause 29BA. Clause 29BA, which talks about whether any amount to be included in the income chargeable under the head from income from other sources as referred to clause 10 of subsection 2 of 56. Okay. 29BA talks about any amount, okay, which is specified under section 56 to 10 to be included in IFOS. Now I'll give you the option for this particular question. Okay. So let's say, for example, this one. Kindly state the appropriate reporting requirement with respect to the car received for completing the sale target given by the company in Form 3CD. Clause 16D, Clause 16A, Clause 17, Clause 19, or you can say also, one more option is Clause 29BA. Which is the correct answer? Which is the correct answer over here? This is the clause 16 that we discussed just now. Amount not credited to profit and loss account. Come on, guys. At least try, I'll suggest. Okay, Namrata. Good. So this particular transaction, first of all, let's see whether this is transaction which falls under section 28. This transaction, does this transaction fall under section 28 or not? Does this transaction falls under section 28 or not? Let's understand first that whether this transaction is a part of section 28 or not. Yes, no. whether this transaction is part of section 28 or not. Come on, guys. Whether this transaction is part of section 28? Yes, no. You guys are not giving the answer, or I'm not getting the answer? See, without participation, there will be no, like there will be, you will not, will be able to learn appropriately the way we want, because the more you will participate, the more you will learn. Trust me, I need participation from your side, because form 3CD is not just, I'll provide you the detail, I'll explain the provision and that's done. No, there are transactions, there are complex transactions, there are some transactions which are into the gray area, borderline area, or there are transactions you will feel, no, this should go, this will go here, but in actual it shouldn't go, because it's not only a particular, thing or section is applicable. In a transaction, you need to think under which section of the Income Tax Act is applicable, and accordingly, trust me, at times it can become very complicated. Great. Okay. So, yes, Namrata, Jay, Janvi, good. So, whether this transaction falls under section 28, answer is yes, it falls under section 28 4. Section 28.4 talks about the value of any benefit or perquisite, whether convertible into money or not, arising from the business or the exercise of a profession on which there is a TDS 194R. It's the same transaction, value of benefit or perquisites. Okay, so 28.4, it's there. So first I confirmed, yes, 16A could be the one only. Like, so it can be possible that the transaction is reported in multiple clauses. So 16A, good. I know 16A is there. Now 16E, capital receipt. Whether this is a capital receipt. My next question. Whether this is capital receipt. Whether this is a capital receipt. Come on, guys. Okay, Jay. Good, Janvi. So, answer to this is no, this is not a capital receipt. I have not received the amount, I have received an asset. So I cannot classify as a capital receipt. Capital receipt will be where I have received the amount, cash, or in bank, or some amount, monetary amount. But here it's not a receipt, it's a receipt of capital asset. That's different. So this is not a capital receipt. So I know now, if this is not a capital receipt, in that case, it will not be part of my 16E. Done. Good. Great. Great job. Now the question comes, whether I will record this transaction under 29BA, whether any amount is to be included as income chargeable under the head of income from other sources, as referred to clause 10 of subsection 2 of section 56. What 56.2.10 talks about? 56.210 talks about. Come on, guys. What is the section 56.210? What is section 56.210? Correct. Correct, Janvi. Come on, guys. What is 56.210? Fifty-six to 10 talks about basically an amount where any person receives in any previous year from any person or person after first day of 2000 1st April of 2017 any sum of money without consideration, any immovable property, okay, uh, or any other property other than the immovable property without consideration, okay, if for a consideration which is less than the fair market value and the difference amount is exceeding 50,000 rupees, or without consideration for which the fair market value exceeds 50,000 rupees. That is uh, 56 to 10, and that item is treated as a income from other source. The value of the fair market value, or the difference between the fair market value and the consideration paid exceeding rupees 50,000, will be treated as in my income from other source. So will this fall under this particular section, like 56 to 10? So can I say this fall under will fall under 56 to 10? Come on, guys. Can I say this will fall under 56 to 10? That is any property other than immovable property without consideration, the aggregate of fair market value of which exceeds 50,000 rupees. The whole of the aggregate of fair market value of such property will be treated from income from other source. Can I report it here? Yes, no, quickly. If no, then why no? If yes, then why yes? Quickly, guys. No, yes, why? With reason. With reason, guys. Come on, quickly. Absolutely correct, Jay. So, if you are saying yes to this, if you are saying yes to this, okay, then the answer is wrong. It is no. I'll tell you why. If I say 56 to 10, okay, if I talk about, if I say this falls under 56 to 10, the answer is no. Now I'll tell you the why. Because there is a definition given of other properties. Like if you talk about 56 to 10, it talks about any property other than immovable property. And if you see the definition of other property, that is any property other than the immovable property that is given under that particular section, it talks about shares, securities, jewelry, cycle, archaeological collection, drawing, paintings, sculpture, any work of art, bullion, and immovable property. So, if that is a car which is not part of the property, car does not fall under the category of property. 56 to 10 covers only property. Hence, this will not fall under 56 to 10, and accordingly, it will not be reported over there. Clear? So this transaction will only be reported under clause 16A, that is amount not credited to profit and loss account being an item of section 28, item falling under the section 28. Clear? Okay. Let's do two more clauses, and accordingly then I'll provide you some more detail. One more question. Clause 17. Whether any land or building, sorry. Clause 17 talks about whether any land or building is transferred during the previous year for which consideration less than the value adopted or assessed or assessable by an authority of the state government referred to section 43C or 50C, then please provide the details of property, consideration received, value adopted, and whether the property, like what is the clause under which for the property is applicable, like, under which clause, whether it's 43CA or 50C. Okay. So in case if I'm transferring any property for a value less than the value adopted, okay, stamp duty value by an authority, in that case, I need to write, and the relevant sections are 43CA and 50C. 43CA and 50C of the Income Tax Act. Okay, and accordingly, I need to report the value over here, like consideration received, value adopted, and what is the difference and which section it is. Now, what is 43CA? 43CA talks about special provision for full value of consideration for transfer of asset other than the capital asset in certain cases. And 50C talks about my special provision for full value of consideration in certain cases. Basically, you can call it, stamp duty valuation where the reference is made. So these are the two sections which are applicable if the property is being transferred at a value less than the stamp duty value. Okay, that is 17. Now coming to one more clause I just want to discuss. So there is one more clause whether any amount is to be included as an income chargeable under the head from incomes from other sources referred in clause 9 of subsection 2 of 56. Okay, if yes, then the furnished detail that the nature of income and amount of income. Now, what is 56 to A to 9, guys? Section 56 to 9. Now, this talks about forfeiture of the amount. Forfeiture of the amount where any negotiation was going on for transfer of immovable property, that negotiation did not fulfill, or were not able to complete the negotiations, and the amount was forfeited. The advance amount received was forfeited. That becomes your income from other source under clause 9 subsection 2 of section 56. So that is 29AA. Earlier we saw 29BA, now this is 29AA. Clear? That is 29AA. Okay. So that is a few clauses I wanted to discuss, because I want before I want to go to the next question. Okay. The next question is, during previous year 2021, Mr. A entered into negotiation with Mr. B for selling his commercial building at rupees 65 lakhs. Mr. B paid 1 lakh in advance for freezing the negotiation deal and the price. However, due to some unforeseen conditions, Mr. B died, and the legal heir of Mr. B does not decide to continue with the deal. Mr. A forfeited the whole advance. Mr. A was in urgent needs of the fund, and hence he sold his commercial building to Mr. Y for 55 lakhs. The sale consideration was received in previous year 21-22. The value assessed by the regional registrar for the payment of stamp duty in respect of such transfer was 67 lakh. You need to tell me where I will report this transaction. Where I will be reporting this transaction. If I need to report, where I will report. Come on, guys. Where I will report this transaction. If I have to report this transaction, where I will do in form 3CD. Okay, Namrata, good. Okay, so you guys might be saying, I will report in 29, I will report in clause 17. This one, land and building. Plus, I will report in 29A forfeiture. Correct? That is fine. You will report it over here. Like, okay, 17 and 29. So, clause 17 and 29AA. Okay, fine, good. That will be there. Any other clause that we have discussed till now? Any other clause that we have discussed till now? Any other asset that we have, any other clause that we have discussed till now?
From Harshad PC.
Other than clause 1729AA, is there any other clause where we will report? Come on, guys, quickly. Where I will report? Quite possible January. Could be one of the case. But there is another one clear one which where this particular amount will be reported. Okay, so why can't I report in clause 16E, that is amount not credited to profit and loss account being a capital receipt? So if I have received rupees 55 lakh for the sale consideration, is it not a capital receipt? Will I not report that amount under clause 16E? Capital receipt. So clause 16E. And if I have forfeited the amount of 1 lakh rupees and if I have not credited to profit and loss account, then again, if it is not being credited to profit and loss account, then I need to understand whether it's a capital receipt or revenue receipt. It will be a capital receipt, and accordingly, again, it will be under 16E. So I need to report 1729AA and 16E. There will be three clauses where this particular transaction will be reported. Clear? Any doubt? Any doubt? Okay. If no doubts, then let's take a quick 10-minute break, and after the break, we'll gather back and continue the session. Let's take a quick 10-minute break. So let's continue. Okay. So where we were? We were with clause 17. We discussed clause 17. Now clause 18. Clause 18 is basically on the depreciation. Okay. Clause 18 provides talks about all the details with respect to the depreciation. Let us see. Particular of the depreciation allowable under the Income Tax Act in respect of each asset or block, as the case may be, in the following form. You need to provide description and asset of the block, a block of asset, rate of depreciation, actual cost or WDV. Okay. Adjustment made to the written down value with respect to 115 BAC BAD, but that was only applicable for AY 21-22. Then it is now not applicable. Adjustment made with respect to the WDV of intangible, again due to excluding of goodwill and of a business and profession. That was again amendment in FY 20, Finance Act 2021 with respect to the goodwill. Then you have adjusted WDV after all these adjustments. Then you need to provide the details of addition or deductions during the year with the dates. In case of any addition of the asset, then the date to put to use, including adjustment on account of SENVAT or under excise, or now it will be GST, changes in the rate of exchange of currency, subsidy or grant by whatever name called. Okay. Then you have a depreciation allowable under after calculation based on the rate and WDV. Then you have a written down value at the end of year after depreciation. So basically a calculation of the depreciation is there in clause 18. Okay. Clause 19 talks about amount admissible under various sections. Okay. Now these sections are 32AC. If I talk about line by line each of the section, I'll just provide you the brief, rather not go in the detail of each and every section. Okay. So section 32AC, basically what section 32AC talks about, these are the special sections. Okay. Like for example, 32AC, investment in new plant and machinery, 15% deduction you get of the actual cost of the new qualifying asset. Okay. Then you need to provide amount debited to profit and loss account for that particular, and then amount admissible under the provisions of Income Tax Act for this particular section. So that is there. Then 32AD. 32AD is investment in new plant and machinery. Sorry, AD is new plant and machinery for the backward areas. 33AB. 33AB is amount deposited in tea, coffee, rubber development. 33ABA, where amount being deposited by an assessee approved by the Government of India for the Ministry of Petroleum and Natural Gas for the extraction of minerals and petroleum or natural gas. Then 35(1), any expenditure on scientific research, capital expenditure incurred by the assessee for scientific research. Again, 35(1) to same scientific research. 35(1) 2A, again, amount paid by a company having its main object of carrying out scientific research and development. 35(1)(3), amount paid to a research association which has its main object of undertaking social science or statistical research. Okay. 35(1)(4), again, scientific research on acquisition of any land incurred to business carried out by the assessee. 35(2)AA, amount paid to National Laboratory or Institute of Technology. 35(2)B, basically deduction available to the company engaged in the business of biotechnology. Then 35(A)BB, expenditure being the nature of capital expenditure incurred in acquiring any right to operate telecommunication services. Okay. 35(AC), expenditure by way of sum of any sum to the public sector company or local authority by the National Committee for eligible project scheme. Then 35(AD), in respect of capital expenditure wholly and exclusively for specified business, operating cold chain facility, setting up operating warehouse facility for storage of agriculture produce, laying on operating a cross-country natural gas pipeline, building and operating a new hotel in India, a 2-star and above with specified conditions. Okay. building and operating a hospital, building and operating a housing project, developing and building a housing project. So all these things, beekeeping, a lot of things are there. 35 CCA, expenditure by way of payment to association institution for carrying out rural development program. 35 CCB, expenditure by way of payment to association and institute for carrying out conservation of natural resources. 35 triple C, expenditure on agriculture extension project notified by the board. CCD, expenditure incurred by company on any skill development project notified by the board. 35D, expenditure on Indian company on amortization of preliminary expenses. 35D, expenditure by Indian company for purpose of amalgamation or demerger. 35 DDA, expenditure by way of payment of any sum to employee in connection to the voluntary retirement or voluntary retirement scheme. And 35E, deduction on expenditure on prospecting or extracting or production of certain minerals. So these are certain sections wherein if you have any amount debited to the profit and loss account, you need to mention that amount plus the admissible expenditure that is there under the Income Tax Act. Okay. So that is my section clause 19 with respect to the special sections. Now the question will be, sir, how to remember these many numbers, these many clause numbers, these many sections? Sir, what we should do to remember these numbers and clauses and everything? It's too much of information. See, I agree this is too much of information, but the way to remember is to practice. Trust me. If you'll practice, you will come to know, okay, this is a particular transaction. This is how you need to report. Practice and the practical experience of Form 3CD will help you a lot. Trust me. In my articleship days, I used to, when I used to help my team in for reporting under Form 3CD, the experience that I used to get was also, useful for my exam purpose. Plus, over and above that, the practical questions, the more the practical questions you will solve for Form 3CD, you will remember the clauses, you will remember the details. So the more you will practice, the more you will understand and learn the details. Okay. Okay. Clause 20A or 20B, both. 28 talks about any sum paid to employee as a bonus or commission for service rendered, where such sum or otherwise payable as a profit or dividend. That is section 36(1)(2) of the Income Tax Act. Okay, if you have paid, then that amount will be reflected under 20A. Now 20B talks about details of contribution received from employees for various funds are referred in 36(1)(5)(a). Now 36(1)(5)(a) talks about basically the contribution to various funds. So if any fund if any amount has been received, okay, from any of the employee, okay, with respect to the contribution to the funds, then in that case, that will amount be will be reported over here. Now, basically, if you see, like 36(1)(5) talks about or gives a reference to your exempt incomes or the contributions. So accordingly, you need to see from a holistic point of view. Any doubt? Any doubt? Okay. If no doubts, then let me proceed forward. Then the next is 21A. Again, very important, very, very important. Okay. Now, 21A talks about amount debited to profit and loss account. See, earlier it was amount not debited to, not credited to profit and loss account, but this is debited to profit and loss account. There's a difference between both. One talks about not credited, one talks about debited. Now, once the amount being debited to profit and loss account, you need to provide the details of these. That amount being debited to the profit and loss account being in the nature of personal capital or all those expenditures. And these are capital expenditure, personal nature, advertisement expenditure in any souvenir, brochure, tract, pamphlet published by a political party, expenditure incurred at clubs being entrance fees and subscriptions, expenditure incurred at clubs being cost of club services and facilities used, expenditure by way of penalty, fine, violation for any law for timing, force, expenditure by way of other penalty, fine not covered above, expenditure incurred for any purpose which is an offense or which is prohibited by law. If any such amount being debited to the profit and loss account, then in that case, you need to report that amount. Okay. Again, either it's a personal expenditure, capital expenditure, advertisement, for fines, subscriptions. So if that is the amount, then you need to report it. Clear? Any doubt? Okay. If no doubt, then I have one doubt. Okay. Now, when we need to report the amount, let's say, for example, expenditure by of penalty, fine, or violation. In that case, I have one doubt. Like, let's say, for example, there is amount to be paid by the assessee. Amount to be paid by the assessee. Okay. In respect of interest on delayed payment of GST dues. So interest on delayed payment of GST dues was there, which was debited to profit and loss account. Will that interest fall under these clauses or not? Whether that interest will be, will be reported here or not. Come on, guys. Whether that interest will be reported over here or not. Okay. It is being expenditure debited to profit and loss account, being penalty or fine or any other penalty, fine not covered above, or for any purpose which is an offense or prohibited by law. So whether that will be covered here or not. Come on, guys, quickly. Whether interest on delayed payment of GST dues will be covered here or not? Okay. Now, whether now first we need to understand here that okay, interest on delayed payment of GST dues. Interest on delayed payment of GST dues is a penalty or fine or not. Okay, penalty or fine or not. So interest on delayed payment of GST, first of all. Now, any tax, so if you read the section 43B of the Income Tax Act, it says that the following deductions are specified, allowable deductions, which talks about any tax, cess, duty, fee paid under law is allowed as a deduction when it is paid. Okay. So it talks about any tax, duty, cess, or fee paid under any other law. This includes GST also. Okay. And it includes interest on GST also. So first of all, that falls under the category of 43B. Now, when I talk about expenditure by way of penalty, fine, violation, that is covered in 30 of the tax act. Okay. And these are disallowed. So section 37 talks about amount which are not allowable, which are either penalty or fine. Also, I need to see under the law whether the interest is in nature of penalty. See, penalties are different, interest is different. Okay. Penalties are different and interest is different. So penalty or fine, okay, these are inadmissible expenditure under section 37. Under section 37, these are not an admissible expenditure. So that any expenditure incurred by an assessee for any purpose, which is an offense, which is prohibited by law, shall not be deemed to have been incurred for the purpose of business. And no deduction or allowance shall be made in respect of such expenditure. That is the explanation under section 37(1). Okay. And there are certain things which are already specified under section 37. If you read section 37, that under explanation 1, even in that, explanation 3 of section 37, it says that expenditure incurred by an assessee for a purpose which is an offense or which is prohibited by law under explanation 1 shall include and has always included, okay, to compound an offense under any law, to provide or benefit or perquisite in any form to a person, okay, for the purpose which is an offense or which is prohibited, any law or time being enforced, any amount incurred or expenditure incurred. So those are the things which are referred over here, not the amount of taxes or interest which is covered by section 43B. Not be reported under this clause. Interest on payment GST reported under this clause. So that depends upon, that totally depends upon, the provision of the law. GST interest is not a penalty. Here, that's why I specified GST. It's not a penalty, it can be included. Oh, sorry, it cannot be included in this way. Here, it is part of 43B. Clear? So interest on delayed payment of GST will not be falling under this clause. Because interest is not penalty. Yes, absolutely correct. Okay. Then that was 21A. Now 21B. Amount inadmissible under section 40A. Basically, these are payment to non-residents. So as a payment to non-residents specified in subclause 1 of 40A. Okay. If there is any payment to a non-resident which is specified under subclause 1 of 40A, then that particular amount will be reported over here, and on which the tax is not deducted. Okay. 40A1 talks about any interest, royalty, fees for technical service, or any other sum chargeable under this act, which is payable outside India or in India to a non-resident, not being a company or foreign company, on which tax is deductible at source, and such tax has not been deducted or has been deducted but not been paid before the due date specified under section 139(1). In that case, such deduction is not allowable under the head of profit and gains from business and profession. So payment to non-resident referred in 1 in respect of interest, royalties, fees for technical service. Interest, royalty, FTS, okay, to non-resident or outside India. If that is the case, then you need to provide the details of payment, amount of payment, nature of payment, name and address of the payee. Second, details on which payment details of payment on which tax has been deducted but has not been paid during the previous year or in the subsequent year before the expiry of the time prescribed under 200. So if you are deducted but not paid, that date of payment, amount of payment, nature of payment, okay, name and addressee of the payee, amount of tax deducted. So you need to provide details of that. Second, then this was subclause 1 of 40A. Then you have subclause 1A of 40A. That is, if any amount, okay, has been incurred, but that amount will be inadmissible to the extent of 30%. If any, that amount is payable to the resident on which the tax has not been deducted. Okay, so 30% disallowance where TDS has not been deducted. So that is a particular clause that we are talking about. Okay, and if that is the case, then you need to provide the details of payment on which tax is not deducted, like date of payment, amount of payment, nature of payment, name and address of payee. Second, if details of payment on which tax has been deducted but not been paid before the due date specified under 139(1). So date of payment, amount of payment, nature of payment, okay, name and address of the payer, amount of tax deducted, and amount out of which amount deposited, if any. Then under subclause 1C, okay, under subclause 1C, what is 1C basically? 1C talks about any sum paid on account of fringe benefit tax, which is now not applicable. That's why I wrote wherever applicable. Okay. Under clause 2A, 2A is any sum paid on account of wealth tax, fringe benefit tax, wealth tax. 2B, any amount paid by way of royalty, license fee, service fee, privilege fee, service charge, or by way of any charge, okay, which is appropriately or directly or indirectly formed from state government by the state undertaking, okay, that amount will be reported over here. Royalty or charge levied by state government. Okay. Then 3. What 3 talks about? Any payment which is chargeable under the head of salaries if it is payable outside India to a non-resident, and again TDS not been deducted. Salaries outside India or non-resident where TDS has not been deducted. So for that, you need to provide the details of date of payment, amount of payment, name and address of the payee. Subclause 4 of 40A. 40A subclause 4. What talks about is any payment to provider, provident fund or other fund established by for the benefit of the employee of the assessee, unless the assessee has made effective arrangement to secure that the tax shall be deducted at source from any payments made from the fund which are chargeable under the head of salaries. So payment to provident fund or other fund set up by for the benefit of assessee. So there is an exception, subject to exception. Fifth, that is any tax actual paid by the employer referred in clause 10 CC of section 10. 10 CC of section 10. Okay, if any amount has been actually paid by the assessee under 10 CC of section 10, then in that case, that will be reported over here. Basically, 10 CC talks about in case of an employee being an individual or deriving income from perquisites, not a monetary, not provided by way of monetary payment. Okay. So it talks about basically a perquisite. Okay, for employee. Now, then it is amount being debited to profit and loss account being interest, salary, bonus, remuneration inadmissible under section 40, 40BA and computation thereof. 40, 40BA. 40B in case of firm assessable, so any payment of salary or remuneration to a partner in case there is a limit that is defined, and 40BA talks about in case of association of person, body of individuals other than the company. Okay, so for them, so if there is any amount paid as in salary, bonus to them, partnership, firm and association of person, then that the detail and calculation thereof. Then we have a disallowance under section 40A3. 40A3 basically talks about wherein assessee incurs any expenditure. Okay, where he incurs any expenditure in respect of which the payment was made other than by way of account payee check, bank draft, or electronic system exceeding 10,000 rupees. In that case, that will be disallowed. And if there is any amount which is disallowed, then that will be reported here. Payment in cash excess of rupees 10,000. Okay. Now, then you need to make sure that, okay, there is one more reporting with respect to 48.3, that is on the basis of examination of books of account and other relevant documents and evidence, whether the expenditure covered under section 48.3 read with the rule 6DD were made by account payee check drawn on bank or account payee bank draft. If not, please furnish the details below. So whatever payments has been made by the check, you need to specify, you need to check whether that has been account payee check or it's a normal, bearer check. If that is an account payee check, then it is fine. If it is not, then you need to provide the details over here. Now the question comes at times, we are not in position, or the assessee is not in position to provide the detail whether the check which were issued were account payee check or not. Okay. So at times it will be the scenario that assessee will not be in position to provide you the details that, okay, all the payments that were being made by the check are account payee check or not. In that case, what you will do? What you will do in that case? So let's say, for example, practically it may not be possible to verify each payment reflected in the bank statement that they were made through account pay check or bank draft or using electronic clearing system. What you will do in that case as a tax auditor, what you will do? Come on, guys. Now, practically, it is not possible to verify each and every transaction, whether it was there or not. What you will do then in that case? Okay. Let's say, for example, during the year, company made rupees made 2 lakh payments through checks. Okay, 2 lakh payment, remember. Now you will not have a copy of check for 2 lakh checks in front of you. Okay, you may be having a counterfoil, but you may not have a copy of a check to verify whether it was account pay drawn or not. Auditor is not able to get evidence whether the check were account pay or not. In that case, what you will do? If that is the case, like you are not getting the details, what you will do? Guys, come on, quickly. So if you are not able to get the details whether the check were account pay drawn or were account pay demand draft, bank draft, what you will do in that case? In that case, I will take a written representation from assessee that account pay checks and bank draft are the checks which are issued are account pay checks and bank draft, plus I will specify this remark, that is that on the basis of the examination of the books of accounts and other relevant documents and evidence, whether the sorry, not this one, sorry, my mistake, not this one. Okay, so I will specify a comment that on the basis of books of we were not able to get appropriated audit evidence with respect to verify whether the checks which were issued were account pay checks or bank draft. Okay, and hence accordingly we have provided this particular like I'll provide this particular note that okay, I was not able to verify and accordingly we are not able to report any detail on this. So I'll just show you one example of that. So I will write this particular statement to that extent to give the effect that okay, that it was not possible for me to verify whether the details, whether the payment in excess of 10,000 aggregate have been made by account pay check or otherwise. And accordingly, I'm not able to report anything. Okay, so that is the comment that I need to specify in my form 3CA or 3CB, and I need to specify the details that okay, this was a scenario. Same way, on the basis of like if you see now, like 40A 3A, which talks about 40A 3A, which talks about basically amount that is paid in respect of liability of previous year. Okay, so liability you incurred in previous in other preceding previous years, okay, or in any of the previous year, which is paid now in the current year, in the current previous year, other than by account pay check or bank draft. Okay, so in that case, you need to refer that amount over here. So amount paid in in current year and liability incurred in previous years. Okay, so that will be reported over here. Same, if I'm not able to get the details, I'll write it the comment. I'll write that comment particularly that okay, I don't have that particular detail available, and accordingly we were not able to verify. Okay, then again, provision for payment of gratuity not allowable under section 40A7, gratuity 1. Any sum paid by an assessee as an employer not allowable under section 40A9. Okay, now 40A9, if you see, it talks about basically no deduction shall be allowed, like no deduction shall be allowed in respect of any sum paid by the employer towards setting up formation of contribution fund for the like to contribution to any fund, trust, company, AOP, BOI, society, okay, or other any institute, except where the amount paid, okay, is required by the law. So that is 40A9. Setting up and formation of fund. Okay. Then particulars of contingent liability. Particulars of any liability of contingent nature, contingent liability. Then amount of deduction inadmissible in terms of section 40A in respect of the expenditure incurred in relation to income which does not part of total income. And the last one is deduction amount inadmissible under section proviso to 3613. Now, if you see 3613, 3613 talks about basically any sum or amount, okay, and that is to proviso, okay, that any amount of interest paid in respect of capital borrowed for an acquisition of an asset, okay, for any period beginning from the date when the capital was borrowed for the acquisition of the asset till such date where the asset was put to use, basically talking about the borrowing cost, okay, which is required to be capitalized. So that amount is inadmissible, and that is required to be reported over here. Now, till I, we started from A to till I, there is one thing we need to focus over here. All these amounts, whatever we are discussing, okay, all these amounts from A to I, okay, are the amount under clause 21. Are the amount which are under clause 21. Same clause. So you need to if you are referring, you need to refer accordingly. Okay. Any doubt till now? Any doubt? Now, when I talk about, okay, so there is a confusion on this. Okay, let me clarify. So when I talk about clause 21, basically over here, sorry, this one, 21, I'm talking about amount debited to profit and loss account. Amount debited to profit and loss account. And if these are from A to my I, if these are the amount which are debited to profit and loss account, debited, then only I need to report. Then only I need to report. Like for any amount debited to profit and loss account for any liability of a contingent nature. Any amount debited to profit and loss account, amount being inadmissible under proviso to section 36(1)(3). So if that is the case, then only I need to report here. So that's why I'm saying it is in for clause 21 in continuation, whatever we discussed, whatever we were discussing. Okay, clear? Any doubt? Okay. Then clause 22, important clause. Okay, very important clause because it talks about amount of interest inadmissible under section 23 of MSME Act. Now, what is section 23? So there is an interest, section 23 of the MSME Act lays down an interest payable or required to be paid by the buyer in accordance with the provision, okay, which is disallowed under Income Tax Act. Now, this interest is based on the, like from the date, from the due date that from where the buyer was supposed to pay, okay. And this is also, paid at the rate which are defined and which are, prescribed by the Act itself. Okay. So section 23 of MSME Act requires to pay this particular interest. And accordingly, that is required if that is inadmissible and will be reported over here. Okay. Then 23, clause 23, particulars of payments made to persons specified under section 48(2)(b). Okay. Particulars of payment made to persons specified under section 48(2)(b). Now, if any payment has been made which are to the persons which are specified under section 48(2)(b), in that case, you need to report the amount over here. Basically, if you see the 48(2)(b), 48(2)(b) talks about like relatives, related parties. So if you see 48(2)(b) talks about that, wherein assessee is an individual, the party or the person specified will be relative of any assessee. Where the assessee is a company, then director of the company, partner of the, if there is a firm, then partner of the firm. If association of person, then member of association of person or HUF, okay, or any relative of such director, partner, or member. Any individual who has a substantial interest in the business and profession of the assessee. Okay, so there is a definition, long list given under section 48(2)(b), wherein the list of specified person is given, and if any payment is made to those specified person, in that case, that amount is required to be reported over here. Clear? Any doubt till now? Any doubt till now, guys? Any doubt? Okay. Section 20, clause 24. Amount deemed to be profit and gains under section 32AC, 32AD, 33AB, 33ABA, or 33AC. Again, these are special provisions wherein you get a deduction. And when I say amounts deemed to be profit, okay, when you do not satisfy the condition provided under these sections, okay, when you are not able to satisfy the condition under these sections, so in that case, like the amount of deduction that you have taken becomes deemed income under the head of business and profession. So that amount will be deemed to profit over here and will be reported over here. Okay. Then clause 25 talks about any amount of profit chargeable to tax under section 41 of and computation thereof. Okay. 41 provides that where any allowance or deduction has been made in any of the assessment year, okay, for in respect of loss, expenditure, trading, liability incurred by the assessee, and subsequently during the previous year, the assessee obtains that amount, okay, in respect of any loss or liability or provision that has was booked, then the value of the benefit that becomes taxable as a business income, and that is under section 41 the amount which is required to be reported over here. Let's say, for example, there was a loss due to fire, company booked the loss, appropriate loss in the books of account and everything, and later on they recover some of the amount in against that particular loss, then that amount will be chargeable to tax under section 41. Okay. Any doubt till now? Any doubt? See, it's all about the sections and the provisions of the Income Tax Act which are applicable over here. If you are clear with that, you will be able to understand the details of Form 3CD. Trust me. Otherwise, it becomes very difficult for anyone to understand the details of Form 3CD. Till the time you do not have a knowledge and clarity about the provision that we are discussing, it will not be possible to understand Form 3CD fully. See, it's an audit under fiscal laws. So the provisions of the fiscal laws will be applicable over here. And they are very important. So it is not just the case that, the basic audit and you can answer the questions of audit under fiscal laws or regarding Form 3CD. That is not correct. You need to have a good knowledge of the sections which are mentioned in Form 3CD and their relevant section. If you want, I'll suggest, if you want to read about any of the clause in detail, there is also guidance note issued by the Institute of Chartered Accountants of India. ICI has issued a guidance note on tax audit under section 44 AD, AB, where they have explained each and every clause in detail, where they have provided with examples each and every clause. You can also refer to that guidance note. Even at the time of audit, we also refer for that guidance note. Because each and every time when a transaction comes, you need to analyze under which section it is falling, where the transaction is going. Clear? Any doubt, guys? Any doubt? Any doubt? Okay. Then, if no doubts, let me proceed further. Clause 26. In respect of any sum referred into clause A, B, C, D, E, F, G of 43B, the liability for which pre-existed on the first day of the previous year but not allowed in the assessment year of any preceding year was paid during the year and not paid during the year. So 43B, guys. Now 43B talks about deduction, okay, in respect of amount when actually paid. Okay. If you pay the amount, then only you will get the deduction. That is a 43B, which is amount of any tax, duty, sales, fee, amount payable by assessee as an employer by way of contribution to any provident fund, amount referred to clause 2 of section 1 of 36, amount of any interest on borrowing or loan, okay, amount of any sum payable by the assessee as a loan or borrowing, like with terms with the prescribed conditions, okay. Then any sum payable by assessee as an employer in lieu of leave at the credit of the employee, any sum payable by the assessee to the Indian Railways for use of railway asset, or there is one more clause in that, but that will be after Finance Act 2023, so that will not be applicable for in your case. Okay, so in that case, like if any such amount is being paid, then only the deduction will be allowed. And if you are not paid an amount, then deduction will not be allowed. Now, if there is any amount for which you did not get deduction in the previous year and you paid the amount in the current year, then you will get the deduction in the current year, and accordingly you need to specify that over here, that amount not paid in previous year but paid in current year. So you'll get a deduction in current year. Oh, sorry. So you'll get a deduction in current year. So you need to provide the details of that amount paid during the previous year. And if anything you are still not paid, then amount not paid during the previous year. Okay. Now this was with respect to the expenditure of previous period for which was we did not pay the amount. Now this is for the incurred expenditure incurred in the current period, same 43B, expenditure incurred in the previous year and was paid before on or before the due date, like you will get the deduction. Not paid, okay, not paid on or before date, for which you will not get the deduction. So you need to provide that detail. Deduction on basically actual payment. Okay. Any doubt? Okay. Now, 27A, amount of SENVET tax credit availed or utilized during the previous year and its treatment in the profit and loss account, and treatment of outstanding SENVET credits in the account. 27A talks about SENVET. Okay. And this is, sorry, B. This is 27B. Now, SENVET was usually introduced in SENVET and MODVET. Like SENVET was introduced in place of MODVET in 2004. Okay. Then there was SENVET credit rules 2004, under which the credit were there, everything was there. So there was a detailed provision at that time, at the time of service tax and everything. Now, if that is the case for the previous years, for such years, then that will be the amount. But currently, okay, if there is any amount outstanding, okay, in the SENVET credit account, then you need to provide the details of the same over here. So basically it is now records were maintained in RG23 form and all those details were there. Okay. Any doubt? Good. If no doubt, let's move forward. Then 27B talks about particulars of income or expenditure of prior period credited to or debited to profit and loss account. So any prior period expenditure or income, prior period item basically. So any prior period item credited or debited to P&L. If that is the case, then it is required to be reported over here. Then 28, profit and shares of non-listed company. That is again part of the IFOS 5627A and 7B. Okay, where you receive the shares being a company not in which public is substantially interested, and if you receive that without consideration or for inadequate consideration, then there is a amount that is required, the amount that will be treated as an income from other source. But if you receive any shares or any property being a share of a company, okay, in that case you need to report it over here. So any during previous year, if you receive any share not being a company in which public are substantially interested without the consideration or for inadequate consideration referred in 5627A, then you need to report the details over here in clause 28. And if you have received any consideration for issue of shares which exceed the fair market value, okay, of the share, fair market value of the shares, then you are required to furnish that detail, okay, under 52B, 56.2B. So one side you are getting the shares at the lesser consideration. On the other side, you are getting the consideration exceeding the fair market value. 56.2A, 56.2.7A and 56.2.7B. Okay. So I'll highlight here that for consideration or inadequate consideration, without consideration or for inadequate consideration that we have received. Now here we are talking about received any consideration exceeds fair market value. 56.2.9 forfeiture and 56.2.10, that is inadequate consideration exceeding 50,000. So if that is the case, you need to provide the details like the nature of income and amount of income. Clear? Any doubt? Okay. Clause 30, basically it's not that much used, but yeah, that's the clause which is present. Okay. So clause 30 talks about details of any amount borrowed on hundi or any amount due thereon, including interest on the amount borrowed, repaid, otherwise than through an account pay check. You need to refer to section 69D for that. Okay. 69D provides a detailed explanation with respect to hundis and amount borrowed on hundi. Like not that much use as I said, like earlier. But yes, if that is the case, then you need to report it here. Okay. Then clause 30A, which is referred to the 92CE. Okay. Now, what is 92CE? For secondary transfer pricing adjustment. So whether any primary adjustment to the transfer price as referred in subsection 1 of 92CE has been made during the previous year. Okay. So like 92CE is about providing secondary transfer pricing adjustment requiring or making of secondary adjustment in certain cases where the primary pricing adjustment have been made. Okay. So that is secondary transfer pricing adjustment. So that is 92C. And if any primary adjustment to the transfer pricing, transfer price under subsection 1 of 92C has been made, then you are required to report it over here. Okay. If yes, that has been made, then under which clause of subsection 1 of 92 CE the primary adjustment is made, amount of primary adjustment, then whether the excess money available with associated person is required to be repatriated to India as per the provisions of 2 of 92 CE. If yes, whether the excess money has been repatriated within the prescribed time. If no, the amount of imputed interest income on such excess money which has not been repatriated within the prescribed time. That is the detail that you need to provide. However, no secondary transfer pricing adjustment is required if the primary adjustment relates to the assessment year 16 or 17 or an earlier assessment years. Okay. And also no secondary transfer and no secondary adjustment is required if the amount of primary adjustment made in any previous year does not exceed 1 CR. So it has a limited applicability. Then whether the assessee 30B, whether the assessee has incurred any expenditure during previous year by way of interest or similar nature exceeding 1 crores as referred into 1 of 94B. Yes or no? You need to reply yes or no. If yes, then you need to provide the details of that expenditure. Okay. Now, 94B provides that where an Indian company or a permanent establishment of a foreign company in India incurs any expenditure, okay, by way of interest or by way of similar nature exceeding 1 CR, which is deductible in computation of PGBP. Okay. In respect of a debt issued by a non-resident associated enterprise, such interest to the extent of the excess interest shall not be deductible. Okay, so if that is in excess, then it will not be deductible. Okay. So there are other conditions to that particular section, but if that is the case, then you need to report it over here. Okay, so amount of expenditure by of interest, earnings before interest, tax, depreciation and amortization, EBITDA, amount of expenditure by of interest of similar nature exceeding 30% of the EBITDA, and details of interest of expenditure brought forward as per subsection 4, and details of expenditure, interest expenditure carry forwarded as per subsection 4. Okay, so the total interest paid or payable in excess of 30% of earnings before interest, tax, depreciation and amortization of the borrower in any previous year. Okay, or interest paid to or payable to associated enterprise for that previous year is calculated, and the lower of two is taken as the excess interest. 30% or the amount payable or paid. Lower of both will be taken as a excess interest, and the excess interest which is disallowed is to be allowed to be carried forwarded for period of 8 assessment years following the year of disallowance. Okay, against the deduction of profits from the profit and gains of business and profession, subject to again maximum allowable interest expenditure under this section. So if that is the case, you need to report it over here under section 94, and that is clause 30BA. Then whether the assessee has entered into an impermissible avoidance agreement as referred in 96 or during the previous year. If that is the case, then you are required to report it over here. Now, 96. Okay, section 96. These are the general avoidance and GARR provisions, basically. General anti-avoidance rules. So if these are the cases, general anti-avoidance rules, then that are required to be reported over here. Sorry. Now, so if any agreement entered, after 1st April 2017, the provisions of GAR are applicable, and accordingly, those agreements are required to be seen. So if that agreement is an impermissible avoidance agreement as per section 96, there are 4 tests prescribed in section 96, guys. 4 tests. So if you need to perform those 4 tests, and if that is the case, if that falls under the category of impermissible avoidance agreement, then you need to specify the nature of avoidance agreement, amount of tax benefit in previous year arising in aggregate to all the parties to the arrangement. Okay. Any doubt till now? Any doubt? Any doubt till clause 30C, A and B? So we have covered clause 30C till 30C till now. Any doubt, guys? I'm repeating again and again that the understanding of the Form 3CD will be dependent upon the understanding of the relevant sections of the Income Tax Act. You cannot, or should not rather, see it on a standalone basis. Trust me, that is not something you should do. Today, if I want to understand Form 3CD, I need to have a good knowledge of the sections which are prescribed or mentioned in Form 3CD relevant to the Income Tax Act. Till the time you do not have a knowledge, let's say for example, if you are not aware of section 92 CE or 94 or 96 or any of the section, let's say 56, then it will be very difficult for you to understand what amount which is and where the amount is required to be reported. I hope I'm clear. To be frank, how many of you are done with the DT? How many of you have read and are familiar with these sections? Come on, guys. Just a survey I want to conduct. How many of you have read these sections, and how many of you are familiar with these sections, or you are done with DT? Come on, guys. How many of you are done with DT, or you are familiar with these sections? See, till the time if I do not get a if I do not get a response, then I'll assume that okay, you all are familiar with. Okay. Reason because why I'm asking is it's it's necessary for me also to understand whether whatever we have discussed today, whether that particular point or that particular portion is adding any value to you. The discussions today is, do you feel that the discussions today or the lecture today is a value added? Come on, guys. If yes, then it's very good. That's the objective that we are looking for over here. Because guys, till the time you do not refer to these sections, you will not be able to understand. Okay. I'll take it as a yes. Also, I'll request to provide the feedback to us that, okay, whether you need any change or whether you need any further help in this case. What I'll do is in the next lecture is, first I'll complete the Form 3CD and then we will move to the company's audit. And I'll again, in next lecture, I will be discussing the questions and the answers of the company audit. Okay. In the next lecture, I will be discussing the question and answers on company audit, CARO and Schedule 3. It will not be a detailed lecture, where I will be explaining the provisions. It will be only discussion of the questions and answer and the practical side of the company audit, CARO and Schedule 3. For that, you have to refer the previous lectures and the study material. So for the first half an hour or 1 hour, I'll close the Form 3CD and then we'll jump to the questions and answer for the rest of the topic. Okay. Okay, then. Thank you, guys. Thank you for participating in today's lecture. I'll see you in the next lecture and we'll continue with this. Ashok ji. Okay. Thank you, sir.